Morning everybody, Mike Niemiec here with some opening grain and oilseed comments on this Friday, April 5th. Doing video here today, but on our daily conference calls we've been kind of going over that we've been in this broad range that we've been trying to define between the January highs for the Chicago wheat, corn, and beans versus the most recent lows. And those highs back in January stemming and falling from as a result of USDA reports, our export sales program to date, and South America to fruition with a crop up at this point. We beat up the markets to our most recent lows, and we've been trying to bounce from those lows. And we're up roughly in the neighborhood of around 3 to 5 cents for the week so far in the winter wheats, but down 22 in the spring. We're up roughly around 6 cents in corn, 15 cents in beans. We're up around $3 in the meal and almost 80 points in the soybean oil. Something that's offsetting those negative price action from the beginning of the year has been the ongoing trade talks with the Chinese. We've also got the weather in front of us and our growing season, both here in the U.S. and North America. And then we also seen where the Commitment of Traders report has put the trade with modest, noticeable net short positions. So all three of those, are they going to go and counter the USDA reports and the other negative news of the South American crop? Well, that bounce that we got is a little bit on the defensive overnight. We're down roughly in the neighborhood of around 5 cents in the wheat and beans. We're down around 2 to 3 in the corn. One of those talking points to try and support the marketplace, the trade talks with the Chinese, came out last night. They were supposed to come out with maybe optimism. They came out with semi-optimism. Trade is not done as of yet. Trump says maybe take another 4 weeks. Sticking points are still the tariffs and the intellectual property theft, which was the sticking point from the beginning. And at this time, it doesn't look like there could be any trade being done between the U.S. and the Chinese with those sticking points still going on. So that kind of put the markets a little bit on the defensive. And once again, that can fall into the camp right now with the USDA reports and also with the South American crops keeping a cap on the market. We're going to have a USDA report coming out on Tuesday, follow up from the quarterly stocks numbers that we got roughly a week ago. And here are the trade estimates for the wheat, corn, and beans in the U.S. Stocks are looking to be a little bit bigger than what we saw back in a month ago. So that's a non-bullish event there. The trade's also looking for a little bit bigger carryout stocks for wheat, corn, and beans in the world versus a month ago. And then also the trade's also looking for a little bump up in production, both in corn and beans in Argentina, a little bit of a bump up in corn production in Brazil, and the Brazilian bean production number being somewhat unchanged. So there too, somewhat of a non-bullish event as well. Weather will be the next thing. It's going to stay sloppy in the U.S., so that's perhaps a supportive point. If we stay like that for another month, then we'll also have our Commitment of Traders report coming out after the close, which in our estimate will still show the trade net short. So once again, more negatives and bullish things right here. We talked about our trading ranges here just a little while ago. Nothing to go to say suggest to take us out of it. So it's a non-bullish event right now unless something trade war takes us out of it, and that's not on the cards, at least as of yesterday's conference. Once again, these are my opinions, not that of ADM or ADMIS. Have a good weekend. I thank you.